Profit and loss is one of the key budgets in your business. You've probably been introduced to profit and loss through tax accounting and seen it there, but unfortunately that profit and loss doesn't capture everything. We're encouraging you to do management profit and loss, which is not dissimilar to an annual cash flow, except there are 5 differences that you need to consider. First of all is accrual accounting. Now that means we're going to account for all the production and value it in the year it's produced against the cost of production. So we'd like you to pick a farming year, not a financial year, because the tax return generally, if you're a farmer, cropping, it'll grab the income of one season against the costs of the next season. Secondly, we don't put GST in profit and loss. That's general standard right through the Australian business accounting system. Thirdly, we'd like you to allow for depreciation on machinery, market depreciation for grain farmers, that's generally 8 to 10% a year. Fourthly, you only allow for interest costs of your loans, not the principal repayments. So only the interest of your loans for land and machinery included in profit and loss. And finally, and importantly, we tend to forget our cost of living, mainly because in a tax return it's not tax deductible, but in a management sense we need to account for what it costs you to either support your family for the year or pay the wage that you are expecting from your business. Profit and loss has traditionally been used as a planning tool where you sit back and plan the next 12 months out. But a lot of farmers are also finding it really useful to say, once they've finished that season, to measure what actually did occur. And then if you've got a record of 5 years of that profit and loss actual occurrence, it gives a rich level of information to know how the farm's been performing, and also helps you with your banks and talking to your accountants about viability. How do we do it? Well, we've given you an example in the eBook that you can follow, and if you're skilled in Excel, you could sit back and do the recording in an Excel spreadsheet. Or we can also use Plan to ProfitAgri software. What is a good number? Well, profit obviously is better if we can write it in black rather than writing it in red. Yes, you will have some years where you make losses because we've had poor seasons or poor commodity price experience. But in planning context, we're really looking at what profits in positive context are we making, because that gives us the elements of a viable business.